Peace and profits, everybody. It's your girl Cha reporting live from the Cosmic Club, and you are watching another episode of the Money Mantra, where I show you how to multiply your money and elevate your mind within the foreign exchange market. Now, for you guys who do not know, the foreign exchange market is the largest financial market in the world. There's about $7 to $8 trillion that move through this market every day, making it super simple for you to go in and grab a couple dollars, a couple $100, a couple $1,000, just depending on what your account is looking like and the amount of capital that you guys have. Now, I do just want to apologize for the noise in the background. They are doing some construction outside of my house, but let's just try to tune them out and really focus on what I'm saying. So for people who have been on my channel before, you already know that I'm going to be doing a review of what the market looks like and just pretty much a refresher into how we actually make money from the foreign exchange market. I do have tons of other videos on my channel that you can check out, whether you're interested in traditional Forex trading or something a little bit more fast paced like binary options trading. But there's a lot of content there if you're just looking to, again, elevate your lifestyle and make more money using things you already have, like a cell phone, Wi-Fi, and a computer. You don't always need a computer, but it is better when you're looking at the charts, if this is something that you're going to be doing seriously. But luckily for you, they also have some free apps like MetaTrader 4 that you can also use to trade. But personally, I just like to see everything big. And if you really want to get jiggy and turn this into a career, it will be helpful to have two screens. But again, all of that is not really necessary to get started trading. Right now, trading is a way to make money by analyzing charts and seeing which way the market is going to move. In this case, we do focus on the foreign exchange market. There are other markets out there, like there's the stock market, there's people that trade commodities, there's people that trade indices, but I like trading Forex because the market is open essentially 24 hours a day, 5 days a week. So there's more than enough opportunities to make money, right? Like you'll have people say, oh, I don't have time for this. I don't want to do this. But if you have honestly an hour out of your entire week, then you'll be good to go. You can make anywhere from a couple of dollars, which is small profits, or you can make hundreds of thousands of dollars and really live off of this. Now, trading, a lot of it is analysis, but when it really comes down to it, all you have to do is click a button to get into that trade. But it helps to know what you're looking at, and just understanding to minimize your risk, right? Because when you're doing any type of investment, it is going to be risky. But if you can understand what you're doing, if you can manage your risk and hopefully minimize them, you can walk away making a decent amount of money, right? And even if you aren't making huge profits at first, that's perfectly fine because you can always build yourself up to that. But the most important thing is going to be understanding the skill, right? Now, on my channel, I focus on traditional Forex trading, but I also have tons of content surrounding binary options trading, which is a little bit more fast paced. It is higher risk, but the reward can definitely be amazing if you have the patience and the mindset to do something like that. So I would just say check out a few different styles and see which one works for you. I really like to dibble and dabble in both because money plus money equals more money. But again, it is about managing those risks, knowing what you're getting yourself into, knowing what you're looking at. So if you guys are interested in learning more about the foreign exchange market, you can check out any of the videos on my channel. You can subscribe to this channel and explore at your own leisure. And also for my repeat people or new people, if you have not already hit the notification bell so that you never missed when I post another video, you're going to want to go ahead and do that right now because I try to make it quick. I try to make it simple and I try to make it easy for everybody to understand, right? Because this doesn't have to be hard, right? It doesn't have to be hard. I'm actually in my second year of trading. This is my first year being more so of a full-time trader, pretty much relying on that to get me through the year. 2020 is when I started. And I have a lot of experience under my belt, I would say, up until this point. I did used to be a part of a really large investment group where I was able to impact tens of thousands of people by hosting live sessions weekly, sometimes with 3,000 people, sometimes with 5,000 people, sometimes with 10,000 people. So I can definitely say that I have some experience under my belt. I've definitely helped people. I've definitely gotten results. So now it's your turn. So I'm so happy that you found this video and you're ready to start your Forex trading journey. So because this is my first video that I've made in a while, we're pretty much going to be focused on some Forex basics, specifically when it comes to looking at the market on a chart. So I am going to share my screen with you guys so that you can see, and I can just give you a breakdown of pretty much how I analyze the market on a daily basis and what it really takes for me to get into a trade. Now, you may see other videos on YouTube, maybe a part of other programs, and those people can be correct too. There are a million ways, probably more than that. There's a trillion ways to analyze the market. So just take what resonates with you. If it makes sense, right, write it down. If it doesn't make sense, that's perfectly fine. Or just simply do some more research and look into it. Again, I do have several videos on my channel, just different ways to look at the market, different strategies, indicators, and techniques. But today, it's pretty much going to be a refresher and a basics video. So without further ado, guys, I'm going to go ahead and share my screen, and we're going to do a quick breakdown as to what you're looking at, different ways to look at it. And specifically, we're going to be focused on support and resistance today, which are pretty much entry points to getting into the market, right? Places that the market has spent a lot of time. And these are going to be areas where you want to take your trades. So I'm going to go ahead and share my screen, and voila. Again, guys, I'm really sorry about the construction noise in the background. It's been going on for months, but let's just try to focus on the video. So first and foremost, the website that I'm going to be using today is called tradingview.com. It's a free website that allows you to look at several different assets and to trade them, right? But we're going to be focused on Forex today. So of course, to access this website, you can go to tradingview.com. And while they do have paid versions as well, once you become a more advanced trader, that's something you can look into. But just to get started and to do your analysis, you can use TradingView for free, which is really amazing. I really like that aspect about it. So when you go to TradingView, this is what it looks like. You're going to see a search bar in the top left corner. And again, you have all these different instruments that you can trade. There's stocks, there's futures, Forex, even cryptocurrency, indices, bonds, and overall economy things. But of course, we're focused on Forex. So that is the tab that you're going to want to click. And if you're taking notes, these essentially will be steps that you will want to follow or things that you will want to know before you get into a trade. Now, once you click on the Forex tab, what's going to happen is the currency pairs that are available to trade are going to pop up, right? And a currency pair is literally just a pair of two different currencies that are trading against each other at that time. And what I really like about TradingView is not only do they give you the symbol, right, which is the 6 numbers of the two currencies that you'll be trading, they also give you the description so that you know exactly what that is. For example, as you can see at the top right here, we have GBP JPY, which is the Great British Pound against the Japanese yen, right? We also have Euro USD, which is the euro versus the United States dollar, and so on and so forth. USD CAD would be the United States dollar versus the Canadian dollar. But again, we're only going to be focusing on one currency pair today, which is going to be Euro USD. Right, that's one of my favorite currency pairs, simply because it is one of the most traded instruments in the foreign exchange market, and it accounts for about 80% of all trades that are done, right? So there's going to be a lot of liquidity in this market and tons of opportunities for you to see a profit. So if you are taking notes or you're following along, you're just going to want to select which currency pair you want to trade. And again, today we're focusing on Euro USD if you want to write that down. Now, Forex View has an amazing user interface. It's so simple and very intuitive to use once you get familiar with the lingo of the foreign exchange market and what you're actually looking for and what you need to trade, because it's not that much information, right? So what we're looking at right now, I like to consider the naked chart. And the chart is naked simply because there are no indicators or anything that's telling us about the price other than the candles themselves, right? Now, when we really get into it, you'll be able to add things. For example, you're going to see some blue dots pop onto my screen, right? That is an indicator. It's telling me even more about the price, right? Just want to give you an example of another indicator, TMA. right? You see three lines popped up onto my screen, a lime green line, a yellow line, and a red line. These are also indicators that are telling me more about the price. But for today, we're not going to be focusing on that. We're strictly going to be focusing on the candles. We're going to be focusing on establishing support and resistance, establishing where the supply areas are, where the demand areas are, and what are the best places to get into these trades. Now, one thing I really like about trading is that it's really simple. Right now, it may seem a little bit overwhelming at first, simply because you've never done this before. But once you see how simple it is, even if this is your first time ever watching a trading video, and you're like, wow, that is really simple. Don't be shocked by how quickly and easily you pick it up. Because most of trading, what it really comes down to is discipline, right? And proper risk management. But looking at the charts and understanding what you're seeing is not the hard part of trading. Right. It may be a little bit overwhelming at first because you've never seen anything like this. You don't know what this is. But once you get these basics, I promise you that you will be fine. So first and foremost, we have candles, right? The candles are these red and green bars that you see with these lines coming out of them. And these essentially are just telling us what is going on with price within a certain amount of time. Right. So the first thing we did on TradingView was we selected our currency pair, which you can still see at the top left. The next thing that you can also select would be the time frame that you want to actually analyze your chart on. So you can analyze it as quickly as every 1 minute, meaning one of these candles will generate every 1 minute, or you can analyze it as far as 1 day, where each candle would essentially be representing a day. Right. And let me take these things off my screen. Right? So the time frame tells you how often or how frequently one of these bars is forming, right? That's pretty simple and straightforward. The time frame tells you the frequency at which these bars are forming, right? So this last bar would be the price for the entire day, right? But if I change the time frame to 1 hour, right, you'll notice that each bar will represent an hour. So this will be 1 hour, 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 this will be 1 hour. Now, based on the type of trader that you are, is going to depend the frequency that you want your candles to appear. If you're a scalper, you're going to want to look at smaller time frames because you're trying to be in, you're trying to be out, you're trying to be in, you're trying to be out. But if you're a swing trader, meaning you plan to hold your trades for a couple of days, you may want to analyze it on the 4 hour or the day, but that's going to be completely up to you. Either way, it's going to look the same. It's just the frequency at which your candles are forming. Now, the candles are telling you where price was at. What were the buyers in the market doing? What were the sellers in the market doing? Who had more control over the market at the time? And you'll notice that there are only two colors that will be on the chart. There's your red candles telling you that sellers were in control of the market, really pushing price down. Then you'll see green candles telling you that the buyers were in control of the market, pushing the price up. If you see a series of red candles, like here, that tells you that price was selling for a really long time. We can see that price, and I'm just going to use a horizontal line tool, nothing special, just a line. And we're just looking at this section as an example. We can see right here, price was as high as $1.05. And then we literally can see a selling trend because it continued to drop. It's like a roller coaster, right? Price started at $1.05, and then it actually dropped as low as, we can go all the way down here. It dropped as low as $1.04, right? So that's what the candles are telling you. If they're red, they're telling you that sellers are really in control, getting price lower and lower. If they're green, they're telling you that price is going higher and higher and buyers are in control of the market. That's going to be important to understand when you're trying to decide whether you want to buy or sell in the market, right? Now, each candle is going to tell you 4 things. And this is really important and something that you guys should write down if you're going to be taking notes, because note takers are what? Money makers, right? Note takers are money makers. So again, write this down. If the market is going up, you are going to notice a series of candles that are going up. If the market is going down, you're going to notice a series of candles that are going down. Now, when it comes to support and resistance, support is a place in the market, right, where you can see that a lot of people were buying in, right? You can literally see that a lot of people were buying in and that price was not able to get lower than that point. This area can also be called the demand area, right? Now, the demand area will be at the bottom, right, where you can see everybody was getting in, and the supply area will be at the top where you can see everybody was selling. Now, again, the candles are going to tell you 4 things about the price. The body of the candle is telling you, like, if you see a big body candle, that's telling you that there's a lot of volume in the market. A lot of people were trading at that time. For example, look at this candle. This is a big body green candle, letting us know that price was consistently going up. Right here, we can see a big body red candle where we can see price was consistently going down. There were a lot of sellers in the market. And then on the flip side, if you see a smaller candle like this, right, this little green candle, you can see price really wasn't going either way. There's a small body, so there's not much volume, and the market was really indecisive at that time, right? Now, each candle is going to tell you 4 things about the price, and this is something that you should write down. It's important to know that buy candles, and let me just get my pen, right? It's important to know that buy candles start at the bottom, right? So the opening price for this candle was here, and then we can see that the closing price for this candle was here, right? For this part, you're going to want to focus on the body of the candle. It's going to tell you the opening price, right? That's going to be the flat bottom of a green candle. And it's going to tell you the closing price. That's going to be the flat top of a green candle, right? Then you also have these things called wicks, which are these lines that you can see coming out of the candle. And that's pretty much going to tell you the highest and lowest place that price went within that time period, right? Now, just to back it up a little bit for people who may be confused, let's just focus on this candle, right? This green candle right here. We can see that this is the highest that price went within this hour, right? Because this is where it wicked at. We can see this is the lowest place that price went, right? Because we see a wick. And then the flat area where buyers spent most of the time, this is where price actually opened and started. And then we can see the top. This is where price actually ended and closed, right? So the easiest way to remember it for a green candle will be open, close, high, low, right? And let's just look at another candle. We have an open, close, high, low, right? That's telling you a lot about the price because you need to know where you're going to be setting these support and resistance lines. Now, for red candles or sell candles, and because price is going down, of course, in this case, it would be the opposite. So red candles open at the top. The opening price started here. The sellers were able to close the price here, right? However, price had a high at this wick and price had a low at this wick, right? So you're pretty much looking at the entire candle, right? Let's look at this red candle. You're looking at the entire candle. You're seeing where price opened or where the market started for the sell. You're seeing where price closed. You're seeing the highest point that it got within that time frame, and you're seeing the lowest point that it got within that time frame. So it's pretty easy to remember if you just remember open, close, high, low, right? Because that's telling you a lot about the price and essentially where you're going to set up these areas of support. Where are people buying, right? Where are people selling? And that's important for you to understand if you are planning to become a profitable trader, right? Now, the market pretty much works on something called supply and demand. So supply is the resistance area or the highest place that price went before it started to sell, right? And there's going to be aggressive selling taking place at that point. And support or demand is going to be a place where you can see the market started to buy. And these are going to be the areas that you essentially want to get into. Now, let me show you just an example because we're here right now, right? So how you really want to highlight your supply and demand areas when it comes to trading is you're going to want to use your rectangle tool on TradingView, which is pretty simple. It's going to be the 1, 2, 3, 4th one down. You want to click the paintbrush, click the arrow to the right, and click your rectangle tool, right? Now, you're going to notice where these areas are because they're going to be a bunch of wicks in that area, right? So this is a demand area. We're just going to turn it blue, right? Because, or green, whatever floats your boat. We're going to turn it green to let us know that this is an area where people were buying, right? And then we can, let's go up here. And then we can put a box right here, right? And we can see that this is an area where people were selling, right? Now, look at this, guys. We see the wicks for the candles, right? We see that this is the lowest place that price has went here. We see that this is the lowest place that price has went here, 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 right? And we can literally see every time price got into this area or this zone, it actually decided to go back up the other way, right? This is a really great example. We have price coming down into our demand area. We have price coming down and then going back up, price coming down, going back up. And we don't see any candle activity below this. That's how we know that this is a great, great, great demand area, right? And then we have a supply area up here where we can see price got close to this area, came back down, price got close to this area, came back down, price got close to this area. And essentially it may come back down, right? Now let's just look at some other examples in the market. And we can see literally it's happening in real time, right? Price got into our supply area or our resistance area, and we can see that it's looking like it wants to come back down, right? Now, this is very, very easy to spot, right? And the easiest way that I say is that if you see a collection of wicks, this is going to be a place that you want to essentially take your trade, right? Because price will, again, let's look at this example. Price will come back. It will test this area. It will test this area. It will test this area. It continued to test this area. We see the sellers wanted price to go low, right? We see lower low, lower low, lower low, lower low. But then again, once price actually got into the demand area, it took off, right? It took off for that buy. Now let's just look at some other supply and demand examples, just so you can see how easy it is to spot, right? And again, you can do this on any time frame. Let's take it down to the 15-minute time frame, right? So what you want to do is look for a, oh, look, right? Even when we made it smaller, we can see price came into our demand area, went back up. It never went lower than this. So we know that this is a great place to buy. Look, price came down, and then we got all this action right here, right? Got all this action right there, right? If you're risking with $1, you could have made $28 just by knowing price came into the demand area and then went up. Look at this. Price came into the demand area and then went up, right? Look at all of this, right? Price came into the demand area and then we have all of this action right here, right? We can see it clearly going up. So once you understand supply and demand, support and resistance, is going to be much easier for you to be able to take trades and to make money in the foreign exchange market. Now let's just look at some more examples of supply and demand. So we just want to look at those wicks and see the area where there was a lot of candle activity. Here's another great example, guys. We see 1, 2, 3, 4, 5 wicks, right? So we know that if the market gets into this zone, we're going to want to take it for a sell, right? Even if we were to drag this all the way across. Look at this, right, guys? So many examples over such a long period of time, because remember, each one of these candles represents 15 minutes. So we can see price went into that area, came back down. It broke out a little bit, came back down, went into this area, had a lot of selling action, right? Had a lot of selling action, right? Went into this area, came back down, went into this area, came back down, right? So that is what you call a supply area or a resistance area, right? The supply is letting you know that price is not going to get any higher than this. And if it does tap into this box or in this zone, you're going to want to be in for the sell, because that's where the major players in the market are taking their trades, right? That's where the banks are taking their trades. That's where the hedge funds and money managers are taking their trades. And they actually have enough capital to control the market. So you don't want to trade against the market. You always want to go with the flow, essentially, right? Let's just look at some more examples, right? You see a collection of wicks. Look at this, right? Let's just highlight it. We see 1, 2. I would say as long as you see 3 wicks, you want to put a rectangle box there. If it's at the bottom, letting you know that it's a demand area where people are buying into, you're going to want to buy into that area as well. So here we have 1, 2, 3, 4, 5, 6 wicks, right? Let's turn it green. So we know that that's our demand. And we can see price tried to get lower and lower, but it didn't get lower. And then price came, there was a complete change in direction and the market decided to go up. Now, if you were into this trade, you would have been able to take profit all the way from entry all the way to here, right? All the way to here. And that's some pretty good profits, right? If you're only risking $1 in your trade, you could have made $130 just by simply understand supply, demand, support, and resistance. Support is going to be an area where price is buying at, and you can see that. And this is also the demand area because a lot of people are buying. There's a lot of demand for buyers in this area. And then resistance is going to be a place where the market is selling. And it's also going to be called the supply. Now we can look right here. Right. And this is super simple to see, like, because once you see it, you cannot unsee it, right? We see price testing this area, testing this area, testing this area. And then look, we had the market completely drop right back into our demand zone, right? So this is pretty simple to see. Supply and demand, support and resistance. These are going to be places where you want to take your trades because that's where the most activity is really happening in the market. And of course, if you want a specific entry, like you want to set your trade for the future, you can also use a line, put it right there, right at the bottom of your either supply or demand box. And then that'll tell you exactly where you would want to set your trade for 1.05424, right? So let's just look at some more examples, right? And I just want to know if you guys can just see, right? You can just drop in the chat, whether you're watching this video now or later, and just see those areas of supply and demand and how simple. Look at this, look like, and it's easy. Your eyes are going to be drawn to it. Look at these wicks, right? Look at these wicks. Let's turn it green because it's at the bottom, right? Letting us know this is a buy area and it wants to correspond with our green candles. Price got into this area. Look, we would have been able to make money from this entire move right here, right? We were able to make money from this entire move right here. If you only risk $1, you would have had a return of $41, right? And I'll just scroll, right? And I'll just scroll so that we can see once your eyes are drawn to those wicks, if the wicks are at the top, that's the area that you're going to want to get in for a sell. If your eyes are drawn to the wicks at the bottom, that's the area that you're going to want to get into for a buy. And you don't want to rush it. You want to be patient. If you see that the market is somewhere in the middle, don't take the trade, right? You can wait. You can wait until the market revisits that area because you know once it gets back into that zone, it's going to do most likely what you thought it would do. Right now, this is a wide view, but we can see a bunch of wicks here. If you guys can see that, just drop it in the chat. Say I see it, whether you're watching this now or later. Right, we're going to turn this red and we can see, right, this was a supply zone. A lot of wicks here. We don't see any candle activity here. And then we see that the market actually decided to sell, right? And that would have been $64 off of $1 risk simply by understanding supply and demand, right? So I think I'm just going to wrap up this video for today. I don't want it to be too long. I just wanted to give you guys an overview as to what is one of the first things that you should look for and what is one of the first things that you should understand when it comes to trading Forex, when it comes to trading in the foreign exchange market. You have to understand what you're looking at. Most people struggle with finding entry points, right? Of all the people I've helped, they always say, okay, Chacha, I understand the indicators, I understand my strategy, but I don't understand when I should be getting into this trade, right? And you're going to want to get into the trade when you see that the market has revisited a certain area multiple times, because even if it doesn't happen immediately, you know it's only a matter of time before things turn around. Here we can see the candle breaking out, but guess what? We can see from the past, the candle is going back into this resistance area, right? Sometimes it may break structure, but we can always just go back and see that, look, there's a collection of wicks here. Once price gets back into that area, which it looks like it's climbing to, we can expect a similar move in the market to go back down. So that's honestly going to be it for today, guys. It was a quick review on supply and demand, support and resistance. And again, supply is the area at the top where a lot of people are selling, where the banks are selling, where the people who have a lot of money to actually control the market are selling. And you're going to want to trade with those people. Essentially, it's like if you see everybody running in one direction, you're going to want to run in that direction because you don't know what's going on, but they're running for a reason. Same thing with buying and selling in the foreign exchange market. If you see that there are a lot of sellers, you see that this is a high area of supply, this is a high area of resistance, you're going to want to trade so that you don't lose your money, and you're going to want to make money with those people. Same thing when it comes to support and the demand area. If you see that every time the market gets into this area, it gets no lower, we see that it's been tapping into it for a long period of time, you're going to want to take your trades there because that's where everybody else is buying. Something you never want to do is trade against the market because you will lose money, right? And our whole purpose of trading is to multiply our money, right? It's to elevate our minds, to elevate our lifestyles. It's not to lose money just because we don't understand what's going on. And even in real time right here, guys, we can see, right, the market is climbing, right? It's climbing towards our resistance zone. And we can already see based on this wick, what did we just learn today? That the market is pushing back down. You really cannot make this stuff up, guys. You cannot make it up, right? We can literally see it dropping. We can see the price 105555. We can see it dropping down, right? So I really hope that this video helped somebody. I really want you guys to put this into practice. You can send me messages on Instagram at Money Mantra Cha. That's MoneyMantracha. If you have any questions about this, or if you learned something, I would really like to see your results. I would really like to see if you've already been trading, how this elevates your trading, or if you're new to trading, I would really like to know that this helped you understand what you're looking at. My whole goal is to help people understand the foreign exchange market, help them to multiply their money, elevate their lifestyles, and to ultimately really become self-sufficient traders like myself. I don't want people to be dependent on me. I want you to be able to come in here, do your analysis, make your money, and take your profits, because that's really what it's all about. So I really appreciate you guys sitting with me today and watching this video. If you found it helpful or you learned something, make sure that you give it a thumbs up, right? Make sure that you like this video, make sure that you subscribe to the channel, explore the other videos and playlists that I have, and I will see you guys next time. So peace and profits, everybody.